Hi everybody, I'm just going to have a conversation about a trade that I'm going to do this week, which is the Taiwanese semiconductor manufacturing TSM option trade as a credit spread. And I'm probably going to buy about 25 contracts for this video. All right, here's the process for this. We're going to use TD Ameritrade screening tool to screen our. I'll show you how to do that, and I've shown it in a few videos. We're going to use E-Trade to verify the fundamentals and earning. We're going to use this software called TradingView, this website to review technicalities. We're going to use Robinhood to actually make the trade. And then once I do the trade, I'm going to use an option calculator to show you what your returns will look like. All right, let's see if I can get this video done in one stretch without having to keep editing it. But the first thing, like I said, is we're going to go through the TD Ameritrade screen. This is a screener that I have. If you don't know how to do the screen, look at my previous videos. We did a screen basically with a decent return on equity, a decent price to earning, and a lot of volume because for options, you want a lot of volume. For this exercise, we're going to use the Taiwanese semiconductor company, which is this right here. If you can see where my mouse is. Okay. The next thing we're going to do is we're going to go to E-Trade to verify the fundamentals. So here's my E-Trade right here. I'm going to first look at the 5-year, how it's done in the last 5 years. And you see the stock is done really well. Okay. The next thing that I want to do is I'm just going to look at the fundamentals real quick here. And the fundamentals, as you can see, return on equity is 29%, which is good. Price to earning, 35 times, which is not the lowest, but for this semiconductor industry, it's actually a pretty good price. And it says that right here. Okay. So the next thing that I'm going to look at is earnings. You can look at the balance sheet and income statement on your own, but they look really good. The earnings, pretty good. It seems like they keep going up. Okay. And the next thing I want to look at is the technicalities. And I use this website called tradingview.com to look at the technicalities. And what you want to look at is these candlesticks. So for the candlestick here in the last month, the market really, for the most part, they want this price at $103. So you want to look at something about $103. So the trade that I'm going to do for me is going to be below that $103. For this exercise, I might go a little higher just to show you how to actually make the trade. And then there's some traffic here at the 105 area. So you definitely want something between this 105 area and below the 105 area at the minimum for this trade, just to be safe. And you see what I'm talking about. The next thing you want to do is you want to look at the RSI, which is the support layer, the resistance or the support index. You want to get into a trade if this is in the 40s. Okay, if it's over here in the 80s, you don't want to do that because the price is high and there's a chance that this is going to go back. The price is going to go back down. Okay, and then you want to look at the ATR and the RMA. But the most important thing is to look at the supporting and resistant levels. And for this one, the resistance and support level is actually pretty decent. Next thing you want to look at, we're going to actually do the trade now. So we're going to trade the credit spread, and I'm going to do a sell put, and for expiration on Friday, January 15th. For me, for what I'm going to do something here, and I'm going to do something different on the calculator. Okay. For me, what I'm going to do is I'm going to buy this at about sell put at 100, and then a buy put at 99.5. Okay. And you can see, well, actually, let me do something different. I'll do something different, actually. I'm going to take this out, and I'm going to take that out. I'm actually going to do sell put at 102 and a buy put at 101. Okay. I'm going to push continue, and I'm going to have my limit at 14 cents. And I'm probably going to buy, let's say, about 20 just for this exercise. maybe let's say 25. Let's see. Okay, and I'm going to review the order. Okay, so for this trade, okay, Robinhood is going to take reserve $2,500, and they're going to give me $350. Now, if this TSM stock doesn't go below $101 by Friday, I get $350, no questions asked, and I get my collateral back. And if TSM keeps moving up, I get some profit at the same time. So this is a really good kind of like an income type strategy, like extra income type strategy. Okay. Now I'm going to go to the calculator, but for the purposes of this exercise, for when I get to the calculator, I'm going to use the price of 100. Remember this, the sell. I'm going to do. Let me just actually show you here. Okay, so when I get to the calculator, I am going to use a different strike. So for the calculator, I'm going to use a sell put, okay, of I'm going to use a sell put of $111, okay, and I'm going to do a buy put of 110, and it's like 11. So I'm going to continue, and I'm probably going to buy, let's just say 35 of those, and that's about 300. That's about the same thing. So this is basically saying that if TSM doesn't go below 110 by Friday, you get $385, and you get your collateral back, which in this case, your collateral is going to be, it should be about the same, but let's just double it. Okay, so about $3,500 is going to be your collateral in this particular case. The other one that I did, which was a lower strike, the collateral is going to be $2,500, but you're still going to get about $385 too. So that's why I chose that one. But for the calculator, remember this, I'm going to use a sell put of 110, of 111, and a buy of 110. So bear with me. All right, now I'm in my options calculator. As you can see here, let me just get this out of the way. So I'm going to move here to credit spread. Okay. And remember our stock was TSM. TSM. Get price. The stock price for TSM is $118.67. Remember our sell put was 111 for this, so it's 111 right here. Gonna buy that right here. I remember our expiration is the 15th of January, which is next Friday. Okay. Our buy is right here, and it was 110. So we'll go 110 over here, and then we're gonna pick this. And if I remember correctly, I think we bought 50 contracts. We bought 50 contracts. Okay, this is not telling me if I can. Okay, so that's it. Here we go. Okay, so we're gonna calculate what we're gonna make, what we can make. Okay, so the entry cost is $10, right? But let's say we buy 50 contracts, we're gonna get $500 off the top to buy 50 contracts. So $500 you're gonna get. The maximum risk is $90 of 110, which is basically the maximum risk is the collateral, which in our case would be $3,500. The maximum return is $10 at 110, 11 at expiration. In other words, if this doesn't go past 111 by Friday, you get your $385, $500 for free. And the likelihood of TSM going to that low by Friday is really low. So you can use this to keep on generating residual income. So thank you.